Hey everyone, in this video we're going to talk to you about how you can passively invest using your IRA. But you can't just use any IRA. So we're going to tell you exactly what kind of IRA you can use, what are the benefits of doing that, and what are some things to watch out for. To help me with that today is Bronson Hill. He's our Director of Investor Relations. Bronson, how's it going today?
Good, Michael. How are you? It's good to be here today.
That's awesome. All right, let's talk about IRAs. You see this a lot when you're dealing with investors. What are some of the biggest questions that you get from when you have calls with them?
Well, a lot of questions just come to, is it possible to use a retirement account and to invest in real estate syndication? Is that even something that's possible? What are kind of the pros and cons of doing so? Can you just talk for a minute about that?
Yeah, I mean, I bet you a lot of people don't even know they can use their IRAs. Is that common, or is everybody talk to you know that they can do this?
Yeah, I would say most people don't. They have no idea that you actually can reuse retirement funds, or there are ways that you can actually set it up to where you can invest in syndications, which is a huge advantage to be able to free up a lot of money that a lot of people see as not even being available.
I remember having a conversation with a neighbor of mine, and he was like, "Gosh, I don't really have any money to invest with you." I was like, "Oh, okay, that's great." And he goes, "I have an IRA, but I mean, and I said, "Well, how much do you have in the IRA?" He goes, "I have like $500,000 in the IRA." And I'm like, what? Yeah, because companies match, and he was in his mid-50s and paying interest in a while, and the majority of people don't know they can actually use their IRAs to invest in almost anything. Real estate, in an LLC, they're all kinds of crazy stuff. But it can't just be any IRA. You have to actually transfer your funds into what's called a self-directed IRA. Self-directed IRA requires an IRA custodian, and it's normally some kind of institution organization that sets up the account and manages the account so that it abides by U.S. tax codes. Okay, the tax code allows for this. Again, most financial advisors, you call up your financial advisor and go, "Have you ever heard of a self-directed IRA investing in real estate?" They go, "No, sounds illegal." It's actually not. It's done all the time, and so you can do it. And the benefits obviously is that there are, depending if you have a Roth or a traditional IRA, you can either defer taxes outright, or when you withdraw those, not pay any taxes at all. So there are advantages of investing with an IRA. The main advantage really is that a lot of people have a lot of money in these IRAs, and it's earning like 1, 2, whatever % a year, and this would unlock all of that. So that makes investing with an IRA very, very powerful.
Oh, that's awesome. No, I get a lot of questions about this. I say this is probably one of the most common questions people ask is, can I, use my IRA? What does this look like? And a lot of people, another thing people don't realize is that a self-directed IRA, just by having a self-directed IRA, doesn't mean you can use it for real estate investing. So a lot of people say, "Oh, I already have a self-directed IRA," but it ends up with some large institutional. It could be Fidelity, it could be Schwab, it could be other ones. And if you actually start asking questions, you actually can't use these to invest in real estate assets. They'll call it a self-directed IRA, but you can only direct it in things like Wall Street. So you actually have to ask some of those questions and say, "Can I use this for a real estate syndication?" And just a little word to the wise on this, a caution: you start talking, like you said, to a financial advisor or a broker about this, they kind of either don't know what you're talking about, or they'll think it's a scam. They'll think there's some issue with that. So it is important to find a self-directed IRA that you can basically use for real estate investing. So I wanted to mention this as well. At Nighthawk, specifically our deals, they typically fill up in just a few days after we start. So somebody, this will be common where people will say, "Hey, I have money, I'm ready to invest in your deal," and it's like stuck in some other type of account that doesn't allow for real estate investing. So we say the best time to set it up, it can take actually a couple weeks to do this process where you're transferring funds, you're filling out paperwork. So there's kind of a process to that. We usually say it takes about 1 to 2 weeks. So the best time to do this is before there's an active deal present. So that's why we try to do videos like this, just so people are ready, whether it's our deal or somebody else's deals, just so that you have things kind of ready to go in the ready position, especially in today's environment where deals are when they happen, they usually fill up pretty fast. So Michael, can you just touch base for a minute, or what are some of the issues that you've seen with self-directed IRAs?
Well, before we get to that, Bronson, because I know you advise investors all the time, is how do you actually set these accounts up? What's the process? You said it takes 1 or 2 weeks. What's that process?
Yeah, so the process is you need to find a provider that obviously will allow for real estate investment. And they're not all created equal. Some of these self-directed IRAs are easier to work with than others. Sometimes it's basically involves finding the right provider that will allow for syndication. You want to actually not just ask real estate. You want to say, do you allow for real estate syndication investments? What is the process of going through that? We actually have a rule that we don't allow for groups that only take paper checks. So when we do distributions, we actually require a group to actually take ACH direct deposits. So there's certain things you want to do when you look at a self-directed IRA, but you'll kind of start a conversation with them also, whether it's our group or another group, you're going to have a conversation. Just say, hey, what do you think about this group? This is how this works. But usually there's a series of paperwork that you'll fill out. You'll have to send something to them. They'll get in touch with your current IRA or self-directed IRA, whatever retirement funds that you have, and there'll be a process where you transfer money over. And it can just take a couple weeks. So it's different for each group, but it just involves, it usually takes longer and is more paperwork and it's more back and forth than you would expect.
Yeah, and so that leads to the other question you were asking, what are some of the issues? So while there are benefits of investing with self-directed IRAs, primarily you have certain tax benefits, but you also have a lot of capital that's not earning a lot of money. But there are complications, and you mentioned one of them. The setup certainly is one thing. If you do this in advance, you have your funds in your self-directed IRA account, you're kind of ready to go. That's great. One of the problems with that is you mentioned one thing. A lot of IRA custodians only accept paper checks. That is really, really cumbersome on behalf of us, the sponsors and the operators. And a lot of operators like us don't actually send paper checks anymore. It's just too difficult to do. So if your IRA custodian insists on paper checks, you will not be able to invest with us for certainly other ones. So make sure they allow for ACHs or possibly even electronic transactions. The other one, besides time to setting up, is the IRA custodian, in order to abide by this specific part of the tax load, requires an arm's length transaction to happen, and one of the things that involves is that they have to sign everything for your IRA. So it's the Michael Blank IRA, but it's really its own separate entity, if you will, and so they are signers on that account. They have to sign on your behalf. So every time you have a document that needs to be signed, like an operating agreement, for example, there's a process for sending in the document, and a lot of the times they insist on paper instead of just signing the DocuSign, and that takes days sometimes, and that's really, really onerous to do. And as you said, Bronson, a lot of these things take within a matter of days. You need to have your money in the account, so it's a real disadvantage if you're using an IRA such that. So that's another a disadvantage. Another one is actually taxes. You actually, believe it or not, may pay taxes in your IRA. Forget all the tax benefits I talked about. Something called the UBIT tax, unrelated business income tax, which usually affects investments that you make that have some kind of debt associated with it. And of course, all multifamily syndications have debt. That's beautiful, but the tax law doesn't think so, right? The tax law makes you pay essentially almost regular income tax on any portion of the income that derives from debt. So let's say, for example, you're using 80% mortgage on that. That means that 80% of any profits you make are taxed and at your 30-40% tax bracket. So in other words, and this is triggered when we typically sell, and this will now trigger a taxable event in your IRA. And I've gone through this, and it's a real nightmare, honestly, Bronson. I mean, you got to go, and now you have to create a tax ID for your IRA. You have to your CPA has to file tax returns for your IRA, and then because you didn't do it, when you started this thing, you may have to pay penalties and interest, and it's a real giant mess. So I don't love it. Because of that. Again, I think it's a great way to get started. The good news is there's a solution for that, and it's called it's a solo 401k, and we probably won't talk about it today. We'll talk about that in the next video on how to prevent taxes in your IRA. We're going to talk about something called a QRP, or solo 401k, and it avoids all this stuff. So it avoids you having to you can sign for your own documents. You can accept wire transfers, ACHs. You are essentially control, and it's a truly self-directed IRA. And so this is where we're steering some of our investors. And we'll talk about that in some other videos. So check down in the show notes. We'll put a link to how to avoid taxes in your IRA called the QRP. So we'll talk about that in another video.
Awesome. No, that's great. I was shocked when I heard that you actually could be taxed within a self-directed IRA. And it can be significant. With a $50K investment, you can be taxed over, it'd be $10,000 to $15,000 inside of your IRA. So having, first of all, having checkbook control, which gives you easier access to your retirement funds is great, which a QRP or other types of vehicles will allow for. But then it avoids the UBIT, which is huge. So this has been great, Michael. Thank you so much for having this conversation. All right, everyone. Well, thanks so much for joining us today. We really appreciate having you on here. You're doing something by investing in yourself, and that's really the best thing you can do as a passive investor is watch more of these videos. So the first thing we want to invite you to do as well is to check out this report. It's at the michaelblank.com/report. Michael has done some amazing work to compare the returns of the stock market with multifamily syndication. So please take a look at that. And if you are really at a place where you're like, hey, I'm ready to start getting involved, I want to get involved to invest passively in a deal, you can join our Nighthawk Investment Club. So if you go to nighthawkequity.com/join, you can basically join. You'll set up a call with our team, and we'll kind of see if it would make sense to work together. We'll get you on our list. So thanks so much for taking time, and we'll see you on the next video.